Supply and demand, price action, what is the best way to trade? Now, I also can recognize these can be incredibly daunting tasks when you're trying to implement them into your trading system. That's why I'm gonna help you in under 10 minutes. Let's get to work. For the sake of the video, we're going to be using the SPY. It's one of the most notoriously traded stocks, ETFs that there is out there. And so it's going to be very easily to relate to you, the viewer. So that's what I'm going to use for this video. Now, primarily when I'm using this specifically for futures to get a broad sense of the market, because if futures are going up, chances are your stock will also go up. That's how I use this personally, but SPY is going to be give and go, basically the same thing as well. So what we're going to do is get you started. Now, if you're a complete beginner, I recommend using 2 indicators to get into drawing these price action levels, okay? So what you're going to do is the opens indicator, which we've already made a video on. If you haven't seen that video, go check it on. The link will be at the end of this video to get you right into that. That will definitely get you stepped into this as well, and make sure it's just a very simple video to get you into trading as well. And again, you can trade right after using that. This is going to be one step higher to get better scalp positions and more opportunities. We're going to use the VRVP. Now, if you go into TradingView, whatever you may be using, it might be the VPVR, but on TradingView now, it's the visible range profile right there. That's what it is. And you're going to turn it on, it's going to look like this. Now, what I'm going to highlight very quickly of what I'm using. When you double click on it, I use 36 and then keep the value at 70 and pretty much ignore everything else. Now, essentially what this is going to do, just so you know, it's going to show you where a majority of buyers or a majority of sellers, or where that volume really is. Because when we talk about trading, we talk about price action. The whole reason we're not using all these indicators is going to be primarily because we want to base everything on volume and where real buyers are. So I'm going to turn off open so you can just see this alone. So you're going to see this red line represents where the most buyers or sellers are, where the most volume keeps coming in. And that's going to be right here at this key support. And so we actually come in and highlight this. You can actually tell this is a low here. And you can see this is where your support comes down to. You can actually bring it all the way down to this local bottom right here. And you can see this has been a major level of support and resistance on the SPY. So that's where we're going to start off right now. So this is where a majority and a bulk of our volume is. But we can also come and see right here, 1, 2, 3. These are our highest levels. So we can also say coming into this, that right here is where we're going to have most of that volume as well, based on this whole time frame going on right now. Now, what does it mean when there's a minimal volume? Like we can see right here, right? There's very minimal volume. That means when price starts to get into this area, so let's say you start trading above this zone, and you start getting into this area to where price starts, it starts coming back up to this level. So we can come back to this, and you can see right here, you start getting an increase of volume or an increase of buyers and sellers. What happens? That's where resistance starts to take place. So we can actually grab this level, move it down. And so if you are to break out of this range and you get above where these volume buyers and sellers are, what's the play? You're looking for an instantaneous move to that range of around 386 on the SPY. And this is going to work for every stock, whatever you're looking at, because you're going to have areas of illiquidity, right? And when I say illiquidity, what that means is there's not very many buyers or sellers, and that's why you tend to see you go straight up or parabolic through key ranges. So as we talk about illiquidity, this is a very big topic and something you need to be looking for specifically in any and every stock that you are trading. Because when you have these areas of illiquidity, that's when you're going to get your money making opportunities. So let's say hypothetically you're going up on a chart and you hit that resistance. Well, after that resistance, typically there's an area of illiquidity to where there's not very many buyers or sellers, so you tend to get a massive breakout. So you have to be watching for these key levels, and the indicator I just showed you, the VRVP, will definitely help you at spotting those if you're not used to looking at the charts and getting a good eyeball at this as well. But once you start to really practice and get into this as well, you will start to notice without using these indicators, because it's very clear on the chart as well. Let's get back into it. Okay, so we're back and we're looking at these key ranges we just highlighted. So we can say that this is a pretty broad-based support down here. This is your top side resistance. Now, we've been trading in this zone, and there's key levels we need to start looking at, because we can't just sometimes target the lows all the way back to the highs. You have to find those key ranges in between those levels as well. So what I like to do is I like to go back and look to see where those ranges are. So we can see that there is a lot of volume just overall in this range in which we were trading, which makes sense because you've traded in this range so many times. Once, twice, and this is your third time so far. So it makes sense that this is a key level overall than what you're trading in, and that you're kind of range bound. So as we get into this, what do we want to do? We want to come back and want to spot where were some of our top side resistances. And so automatically I'm going to come back to this middle level just based on there was no key breakouts and you just trended back and forth. So what I want to do is find this top right here and go to the local highs right there. We have 1, 2, almost a double top there, and you gap through. This is going to be a key resistance for me, and I'll actually just lower it just a little bit. So it's about $1 range, about 80 cents. So this is going to give me an accurate target zone to get into some of these trades. And you can actually even bring it back further if you want to back test it a little bit more and see how it was respected back here as well. And as we come back into this range, you can see there was a little few areas where we kind of popped through and came back. You can also see you started to respect this range right here where it was starting to be established. You get rejected, come back up, get rejected, and eventually try to mount, and once again you fall through. So you are seeing this was respected. So as we bring it back over here, you can start to see as we move down some of these time frames where it was respected once again here, 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 and then again coming through. So you're always trying to look for these key levels to where you were finding resistance or support along the way. And this is going to set up key time frames as well. So I'm going to turn back on the opens indicator so you can see a daily look of what's happening. So basically each purple line represents a whole daily level of action. And then I'm going to go ahead and get rid of the VRVP just so we can see a little bit more clearly. And so when we get in here, if we just look at the past 3 days of trading, how were you respecting this overall range? So we can see that we were getting consistently rejected at these highs right here, and then pushing back down to that key range of support back down here. And again, we have this range based on the data that we had previously here. So if you wanted to successfully trade this on the S&P, you could have easily gone from 381 down to 378 roughly once, twice, 3 times roughly. So you would have had almost 3 trades of successfully shorting this and not hitting any stops because you never broke over these previous highs here as well. And this is consistently what I am looking for. And then once again, when you come back down to this range, you would have had another longing opportunity from that support coming down here once, twice, coming back into this key range, or possibly even holding out on range, trading it for that upside, moving back to 381 from the 373 push down. This could have been a swing if you wanted to, a 2-day trade. But again, these are just trying to give you those scalps and get you into those better trading opportunities. Now, when it comes specifically to getting into some of these trades, you're gonna have to realize when you start reducing the time frames, going from like the 1 day to 4 hour to 15 and 5 minutes, when you start using primarily the 5 and 15 minute, you're gonna get a little bit more of inaccurate data. Why? Because it's not on a broad scale outlook. So primarily when I'm coming into the market and looking at my futures, I'm starting with the 1 day and moving down slowly towards the 4 and 1 hour time frames to make those key levels and spot anything that I may be missing. Because the higher time frame levels are always going to be more respected than the lower time frames. For instance, the 15 and 5 minute. Those key support ranges won't be as strong as something as the 4 and the 1 day time frames because those have held for more time overall. Before I let you out of here, I want to give an example of a longer term type of price level and how you can start taking advantage of this when it comes to some of these swing trades. So what you would do is I'm going to use about the 4 hour to 1 day time frame just to give you a better look, because on stocks you're going to have less overall trading volume type of days as far as something like indexes on futures, to where you're going to have to come out further and further for those time frames. So what I want to do is use the 4 hour chart on a stock for DE. And if you watch the previous channel, we have been talking about John Deere for quite a while and about the opportunity that was there. And basically the premise behind this was if you break below the 307, 308 range, you are going to have some pretty intense volume. And this is going to be the whole description into why exactly. This was overall our support. And this is going to give you a broad sense of what kind of was going on. I'm going to use the opens indicator so you can see how dated this was. Each red line represents a month. So this is overall June. You go back to May, April, March, going all the way back to 2021, the beginning or the end of 2020. And so this represents that this key range was holding for a very, very long time. And you even saw this range up here holding for an extreme amount of time that was consistently being broken and broken and broken. And so the whole premise of this trade, in which I mentioned, and which we were mentioning from the team, was if you break below this level, it was going to be some instantaneous downside back to 300. And so when we come back down to about the 15 minutes, you can see how fast this really did happen and how you can start finding some of these trades. And so you broke below this key level 307, 308, You broke down right here, and immediately when you broke down, you went all the way down to 295. And you're getting massive levels of volume. And for instance, on a stock like this, is you're seeing very slow movement. You'll see 322 down to 317 some days, but it's overall just up and down chop movement, not a lot of volatility. But you're seeing even when you break some of these key levels, you're going to get that instantaneous volatility. So for example, one of the trades that I'm personally looking at right now to do a very similar type of thing is going to be AMD. And so for AMD, we're going to come all the way back out to the 4-hour, and I'm going to show you exactly what I'm looking at. So when you get in here, you can see this key level has held all the way since back in July 2020. This is when this range was established, and it has been holding since. And so what I expect is if you break below this range of around 73, 72, it's going to be instantaneous down to around $70 to $69 almost rapidly. It'll just be an instantaneous drop, flash crash, and then breaking through these key illiquid ranges as well. But you can see on this chart that there is not very much liquidity all the way down to roughly $59. And then these are opportunities that I'm consistently looking for on a broader based time frame. So we've seen on SPY how you can use this on a short based time frame, and then we've seen on AMD now and John Deere and some of these bigger stocks how you can trade them on a longer term time frame with more of swings and leaps if that's what you're looking to trade. Now we've already seen some of this happen with stocks like NVDA. If you go back to Nvidia, we can actually wrap up all this drawing. We've been looking at this stock for a long time on the channel, but if you come back, you can see where was that key level everyone was watching, and in my opinion, it was right here. Once you broke below 180, it was an instantaneous drop from 180 all the way down to 156 in about 2 days. So you can see that when you get through these key ranges and finding these illiquid areas, that it's going to give you those big payouts that you're looking for in trading. Now, I want to be extremely clear when I'm getting into this that this is not going to be an end-all be-all strategy to get you rich quick. And there's going to be key times that you're going to be wrong, or you're going to get a bounce in the market, and things are just going to happen. But the point of using technical analysis and finding these key illiquid areas is to find those big moving opportunities if you can time it with the market as well. Being patient and waiting for these opportunities is the name of the game, because I don't know how to make this any clearer. It's not about making 20, 30 trades a day. It's about making 1-2 great trades every single session. And if you don't have a great opportunity, then sit out of the market.
I got no drip in my pocket.